Welcome to the Deal of the Week. On this weekly call, we go over one mergers and acquisition deal that occurred in the previous week. The goal of this is to help you as a 7 or 8 figure revenue business owner to stop thinking like an operator and to start thinking like an owner investor. Most 7 and 8 figure business owners are going to disqualify themselves from things like mergers and acquisitions because they think that's for large corporates, that's for private equity firms. But I'm here to show you that the principles around mergers and acquisitions can be as applicable to you as a 7 or 8 figure business owner as it is to the Googles and the billion-dollar companies and the private equity firms. The reason that I'm so passionate around you learning these skills is that when we look at the data around businesses that stay owner operator, where they stay thinking that's too big for me or that's not my thing, they just don't sell. The chance of you getting what you want for your business is very, very low. It's 20%. Out of all the businesses in America, you have a 20% shot. And then you compound that with the fact that of the 20% that actually do sell, 75% are going to regret it because they gave up their high income. I want to help you shift to become an owner investor because it's doable and it will help you actually reach your biggest wealth aspirations. So without further ado, let's get to this week's Deal of the Week. I'm sure you're very familiar with the brand Yeti. They have the highly insulated mugs and coolers, really famous brand. They're a public company. The current enterprise value is about $3 billion currently. Well, Yeti this past week went out and purchased a company called Punta Gorda Viral Shaker Bottle. And they purchased them for an astounding $38 million in cash. Now, the reason it's astounding is because Punta Gorda, the viral shaker bottle, they're a private company, so we don't actually know, but the estimations are that they're only doing about $1 million a year in revenue, and yet they were just purchased for $38 million. Now, this is important. You may wonder, why is that? What caused them to be purchased for that amount? Like, what makes them so attractive? It's important to know that when owner investors go out and buy businesses, they're doing it for 3 primary reasons. Reason number 1 is they want additional cash flow. They want more profit. Reason number 2 is they want a new market. They want to enter a new market. And reason number 3 is that they want a new capability. Now, this deal is 2 of those. The first is it's a new capability. And the reason it's a new capability was what Yeti had purchased is they weren't buying the company, they were buying the intellectual property of the Helix IP, the bottle that they had created. And the reason this bottle was so ingenious is most shaker bottles that you have when you go to the gym and you're drinking your protein and you put your powder in and whatnot, there's a metal ball in there that you shake and then it stirs up the drink. But with this technology, the bottle itself, when you shook the bottle, it would create a helix inside and it would create like a tornado effect inside, and that would shake up and mix everything together. So they were buying the IP for $38 million. They weren't buying the company for the $38 million, which is a telltale sign that one of the primary reasons for them purchasing the company was not for cash flow, but it was for new capability. See, instead of Yeti going out and trying to spend the time and money to build their own shaker bottle, they said instead, we're going to buy the capability without having to go design it ourselves because we love that technology and we're going to bring it into our ecosystem. So they went out and bought the capability of that Helix bottle. Now they're going to ditch the name and then they're going to put it under the brand of Yeti, and it's going to be Yeti's now going to have this bottle and this technology and this intellectual property. But the second reason that Yeti did it was new markets. See, Yeti's never really done anything in the fitness space. But now they can enter that space with a very powerful technology and IP that will allow them to stand out and be in alignment with Yeti's brand. So Yeti isn't thinking like an operator. See, operators that think, how can I build this? How can I go about spend the time and money to build this? Usually the owner's gonna be the one, I'm gonna be in the lab and build all of this. But Yeti here is thinking around, they're not thinking like an operator, they're thinking like an investor. And they're seeing this as, this is going to help increase our brand. This is going to help increase our valuation. This is going to help increase our profit. This is going to help us stand in as a stronger company and be less hard to disrupt. That's how investors think. And that's the message that I want to get across for you, the 7-figure, the 8-figure business owner who's trying to build everything on their own. You can acquire capabilities. You can acquire new markets. You can acquire new cash flow. And Yeti, who's the $3 billion giant, who's way bigger than you currently, is showing you the blueprint on how to go about doing that. I'm Justin D. Maxwell. Thank you for watching the Deal of the Week, and I'll see you next week with next week's deal.